Welcome, accounting boffins. You with Ashraf Patel and the crew. We are busy with VAT. Today the emphasis will be on VAT calculations and also possible examination types of questions. Let's quickly go through our VAT story and make sure that we know the story around VAT. Let's take an open-ended question and ask ourselves the following question. Is the collection of VAT a fair system of taxation? Now I'm going to take you back to many lessons that we've done already, and we spoke about direct taxation and indirect taxation. So clearly you can see the way the VAT is designed in our country, that you also have a system whereby you have zero-rated items. Okay, now assuming this was an exam question and you were asked, is the collection of VAT a fair system of taxation, right? Clearly you can see that there are items. Now I'm giving you possible answers to this question. It's an open-ended question, right? And anything that you say, if you justify it, you will then obviously get a mark for it. So what we're saying here is, yes, it's fair because you have items that are zero rated to cater for the poor in our economy, right? And then somebody else would answer and say, but no, why is this particular sector of the economy not paying a VAT? For example, the taxi industry. So obviously, this type of response would come from you, and the way you justify your answer, obviously the marks would be allocated accordingly. So we just thought a bit of a different type of a question to start our lesson with today. Okay, so in terms of our summary, quick recap. Remember we said the standard rate of VAT in South Africa is 15%, right? Remember the ethical considerations of VAT. Remember the internal control aspects of VAT. Remember you get zero-rated items, you get exempted items. Know that there's a difference between zero-rated and exempted, right? We know that zero-rated, the rate of VAT, the tax rate is 0%. Remember we said you get input VAT, all the VAT that you've paid, and then you get the output VAT, all the VAT that you've collected, right? All of this then fits into the VAT control account. Now remember we said that this VAT control account, when you study accounting at a higher level, and where you'll be actually, it is not necessary to do the VAT control account, but what the VAT control account does for you, it brings back together into one account the input and the output. But if you understand the input and the output, then don't stress, because you should be okay. Okay, the question says, choose a word or a phrase from the alternatives provided to complete the sentences listed. Right, let us discuss these concepts before we go into the actual question. Number one, evasion. You know that this clearly is illegal, it is theft, it is fraud. It is tax evasion is where we are expected to pay a certain amount over to SARS and we don't comply with it. That is tax evasion. Right. Input VAT, by this time you should all of you should be shouting out the answer, saying that input VAT is the amount of VAT that we have paid on purchases which we are able to claim back from SARS. Obviously, if we are VAT registered and we are a VAT vendor. Output VAT, clearly all the VAT that we have collected. We also said that we as a VAT vendor, we act as agents on behalf of SARS, where we collect the VAT from the consumer and then we subtract what we have paid and then we pay over to SARS the amount that is due to them. VAT, which is zero rated, we've discussed this at length, but once again, there are certain goods that fall within the basket of zero rated. That means the VAT rate on those goods is at 0%. It could change from time to time depending on the needs of the economy and the needs of the people. Avoidance tax avoidance, we said, is perfectly legal. It's legal ways which we employ in order to reduce the amount that is payable to SARS. Absolutely legal, and something that any business or any person can do in order to legally bring down the amount of tax that is to be paid over to SARS. Finally, VAT exempt items are those items that will never ever have VAT attached to them, right? Examples of those would be education, transport, etc., etc. Obviously, you can go through the lists and look at, in fact, drop a list for yourself where you separate your zero rated from your exempt, and obviously you know the differences between the two categories. Okay, this one says here, is VAT that is collected from customers. Now we have to choose the correct alternate. Clearly you can see that this will be your output VAT. Why? Because that is what we collect from our customers. Okay? Again, output VAT is the VAT that we collect from our customers, which will then be paid over to SARS. Fees payable for education is an example of what? Okay, now we're talking about education. Remember what we said. We've got to choose the correct phrase that matches or completes that sentence. Now, if you look at education, based on our explanation, we know that that is a VAT exempt item. So this fees payable for education is an example of a VAT exempt item. Can you see? This question normally would appear in an exam paper as an appetizer, as a start, just to get the adrenaline flowing, so you know your theory behind the VAT questions. Okay, the next one says here, tax is illegal and punishable by law. Obviously now, we've discussed this at length. We know that tax evasion is our correct answer there, is illegal and punishable by law. We've discussed this at length, and we've had plenty of discussion on tax evasion. Remember, it is punishable by law, it is unethical, it's a criminal offense, it is monies that are due to SARS which is not paid over to SARS. The next item we look at is when VAT is paid when goods are purchased by the business. Right, now you ask yourself the question, okay, we are buying goods. Obviously, we are a VAT vendor. That means we are registered for VAT. So obviously, we're going to pay VAT on the goods that we are buying. Now, what VAT is that? Obviously, that would mean we are dealing with input VAT. Clearly, you can see input VAT is a VAT that we have paid. Understand this, people. Although we VAT vendors, we're going to pay VAT on those goods. However, when we sell those goods, we're going to claim back the VAT that we have paid. And we can only claim back the VAT because we are VAT vendors. So if you're not registered as a VAT vendor, you're going to be paying the full amount of the VAT, and you will not be able to claim back any VAT from SARS because you're not a VAT vendor. You're then trading as a business, but you're actually becoming an end user. Okay, so keep that in mind as well. The next item we have here is a summary once again of all the aspects that we have covered. Quick recap. I think that question actually gave us the key points that we needed to take cognizance of. If we can just look at those questions, those phrases again, it will give us a clear overview of our section. Here we go. We discussed evasion, input, output, zero rated, avoidance, and exempt items. Okay, so if we have to summarize this segment of our lesson, also take into consideration the internal control processes that need to be in place to ensure that we are compliant in terms of our SARS returns. Remember the checks and balances that need to be put in place. Remember that we have to make sure that all the items that are regarded as zero-rated items, those sales obviously must be kept separately. When you're rendering a service for VAT exempt items, those sales have to be kept separately. So you will then calculate your output sales on all the sales that are subjected to the 15% standard rate. Okay, so in conclusion, we've discussed a possible examination question with you, and we've discussed key factors that are important for you with regards to VAT. When you come back, we will be going into some VAT calculations. So take a quick breather, refresh, and when you come back, we'll challenge you to some interesting questions regarding VAT calculations. See you just now. Welcome back, accounting boffins. Right, we're busy with VAT calculations. Once again, if we look at our mind map, we're just going to quickly go through all the important factors. The standard rate of VAT, which we know is 15%, right? Obviously, there's ethical considerations, there's internal control, there's exempted items, there's zero-rated items. The input VAT is the VAT that we pay, which we claim back from SARS, and the output VAT is the VAT that we collect, because remember, we are the VAT vendors and we act as agents on behalf of SARS. Okay, quick one, because we've done lots of this. Now we go into an actual question. It says here, Billy's Canteen is a busy takeaway situated in an industrial area. Although the annual income from sales is less than $1 million, why are they telling you that? Because $1 million is compulsory to register. Below that, voluntary registration. Billy, the owner, has registered for the business for VAT. So although he is not doing $1 million turnover, because he felt it was better for him to be registered as a VAT vendor. Now, the first question. Dodgy dealers, one of Billy's suppliers, offered Billy goods valued at $5,850 for $2,500. He stated that Billy must pay cash and he will not issue an invoice. Okay? Who are we dealing with? Dodgy dealers. Right. What advice would you offer to Billy? Number one, it is unethical to engage in such transactions. Why? Clearly what is evident here, dodgy dealers does not want to show the transaction, meaning they want to limit the amount of taxation, or they want to reduce the amount of VAT that they need to pay to SARS. So clearly they want to engage us in an unethical and a fraudulent transaction. Dodgy clearly wants to evade taxes. Clearly, it is evident from this transaction there can be no other solution. Why would he be offering you goods valued at $5,850 for $2,500 and saying no documentation will be issued and the transaction has to be made in cash? If you get caught, it will result in fines and bad publicity. Remember, the goodwill of your enterprise will be affected. Once this becomes public knowledge, you are then seen as an unethical business. And obviously, whether you may think you're getting away with it, but at the end of the day, you're going to affect the reputation, and it's bad publicity, which we don't need. We want to have that goodwill in the community where we are seen, not only seen, but we are an ethical business. And that is very, very important. Good business practice must uphold integrity, a very important word. Even in our daily lives, you have to ensure that you have integrity in your dealings. Transparency. Obviously, if you have an investigation and SARS comes and check on you and they find that you're involved in unethical practices, which constitutes tax evasion, clearly you can see the consequences for that business. And then obviously, honesty. I mean, this goes without saying. Honesty, we all know, is the best policy. Okay, next question. Billy's Canteen is a busy takeaway. We've dealt with that. We said that although he doesn't have the R1 million, or his turnover is less than R1 million, he's still registered as a VAT vendor. Calculate the amount of VAT that Billy will either pay to or receive from SARS. Right, so you are given transactions now, and you have to actually calculate the VAT amount on those transactions. Let's start off with the first one, where we are told that cash and credit sales for the period, including VAT, amounts to 87,975. Okay, so most important, remember what we said, like we've always said, and we're going to say it again, RTFQ. Read the full question. Right, so this sales figure of 87,975 is your total price including VAT, right? It's both cash and credit sales. So step number one, let's do the calculation for it. And this is what we're going to do. Watch what we're going to do here. Take your 87,975, remembering that that's your total amount and it is the VAT amount that you want to calculate. So therefore you say times 15 divided by 115, and this will give you a figure of 11,475. So what have we calculated here? The 11,475 that we have calculated is the VAT amount on my sales. Now what is important, if you look at my calculation, I took the figure of 87,975, multiplied it by, now remember this is my calculation, this is what the layout in terms of 15 over 115 times 87,975 over 1. Okay, so the question arises, why the 15? Because that's my VAT rate. Why the 115? Because it's inclusive of VAT. So this 115 has got two components to it. It's got the sales figure of 100 plus the VAT of 15, therefore giving me the 115. So when I'm working with VAT inclusive, remember it's always, my calculation will be 15 over 115. So here we go. There's my answer, 11,475. That VAT clearly is your output VAT. Why? You have collected VAT from your cash and your credit sales, and that's the amount that you need to pay over to SARS, because it was, like we said, you're a VAT vendor, you're acting on behalf of SARS, you've charged the customers on their sales, you've worked out the VAT amount, you owe SARS an amount of 11,475. I repeat that, the amount that you owe to SARS is 11,475. Okay, next one. So that one is done and dusted. Total purchases of goods, right? Excluding VAT. Okay? So immediately you can see that the price that you are seeing there is the 100%. It does not have VAT included in it. So, very simple. Let's do the calculation. Here we go. It's your 52,000, right? Let's take our 52,000, and all that you do is you multiply it by 15%, because you want your VAT amount, and your VAT amount is 7,800. Let's see here. There we go. There's my 7,800. Okay, so watch my calculation. You take your 52,000, right? And because it's exclusive, you multiply it by 15%, and clearly you can see that then gives you your 7,800. So what is important and significant here is the fact that because the amount was exclusive, you basically had to add the 15% to it to arrive at the VAT input amount. Now, input VAT. This is the VAT that we are going to pay, but we're going to claim it back from SARS. Okay, so here we go. That one is done and dusted. This one is done and dusted. What about wages? Is it going to impact on my VAT calculation? Come, you should be giving me the answer for this. Certainly not. Why? Because wages falls within the category of exempted items. So no VAT on wages, right? So clearly that is given to you as a red herring. It's there to make sure that you understand what are your zero rated, what are your VAT exempt items. Okay, the next one we have here is telephone, water and electricity. Again, that's the total amount that we have paid. Firstly, we've paid the expense. How much have we paid? We've paid 10,120. What can we do? We can now claim back the VAT. Remember, it's an expense which was VATable, and it's an expense on which we can claim back the VAT. Therefore, we do our calculation. Take your 10,120. Okay, here we go. 10,120. Because it's inclusive of VAT, you say times the 15 divided by 115 will give you a figure of 1,320. Okay, now what I want you to understand here, accounting boffins out there, is that what are you looking for? It's important for you to know what are you calculating. In this particular instance, with this particular transaction, you want to know what was the amount of VAT that was paid for the water and electricity so that you can claim it back from SARS. That's important. So firstly, the calculation is, as you have seen here, 1,320. More important is, or equally important, is the fact that this would be input VAT, amount that we can claim back from SARS. Okay, next one. So there we go. There's my 1,320. So if we look at our calculations so far, you can clearly see that on my cash and credit sales, my VAT amount was 11,475, which we calculated, right? Okay, then let's just change the color here. We paid VAT on our purchases to the amount of 7,800. That will now be the input VAT. So the cash and credit sales was my output. This is input. Wages paid to staff, I know, is not applicable, so there will be no VAT on it. When it comes to telephone, water and electricity, I have paid VAT, which I can claim back. It would be part of my input VAT. So therefore, on that one, the input VAT amounts to 1,320. Okay, now look at the next item. They're telling you here that the VAT amount on old warming ovens that was sold, right? They're giving you the VAT amount. And that is why I say, read the full question. There's no calculation necessary, but they're telling you that the amount of VAT that was collected on old ovens that was sold amounted to 400. So clearly you can see, there we go, that would form part of my output VAT. Why? I've sold the ovens, I've collected the VAT, I need to pay it over to SARS. Okay. Discounts allowed to debtors for early settlements was 1,437.50. Again, let's do a calculation there. Let's take the 1,437.50 times 15 divided by 115. We're going to get a figure of 187 rounded off. Did I just check the calculation again? Let's do it again. 1,437.5 times 15 divided by 115 will give me a figure of, there we go, 187.50. Now, important. You had given discounts to your debtors for early settlement of their accounts. Think about the original transaction. In the original transaction, you had sold goods to debtors. So clearly there was output VAT. But because you're not collecting all that amount from your debtors, therefore you will be allowed to claim back from SARS that component of the VAT which you're not going to be receiving as a result of allowing discounts to your debtors. What did we calculate that to be? We calculated that to be 187.50, and clearly you can see you can claim that back from SARS, right? Finally, we have VAT on goods taken for personal use. Even the owner, although he may be the owner of the enterprise, the fact that he or she takes goods for personal use, they also have to pay the VAT. Clearly you can see, think about it as if you are selling goods, but obviously here the owner is taking it. So therefore, you will still have VAT on those items. In this case, the VAT amounts to 105 Rand. Okay, now, if we have to put this into a table, right? Let's go through each item here individually so you can see what we're referring to. Here's my output that was on my cash and credit sales, right? This was on the ovens that I had sold, and this was on what the owner had taken. So clearly you can see all these items represent the amounts that I owe to SARS, okay? Therefore, falling within the category of output. Okay, now, the 7,800 would be the input VAT that I had paid, okay, on the purchase of goods and services. The 1,320 was the input I had paid on the water and electricity, which I can claim back from SARS. Right. The third one is an interesting one. Yes, it deals with the discount that was given to our debtors, right? And clearly you can see that that amount is what you can claim back from SARS because you are not receiving the full amount or the original amount of the sale. Now, if you separate this, and I want you to do this just to illustrate it and make it clearer to you. Can you see in this figure here, this one here, you're going to find that you are telling SARS, I owe you 11,475 for cash and credit sales, but some of those debtors are entitled to a discount on a portion of their sales. So therefore, you're telling SARS, no, yes, I do owe you 11,475, but because some debtors were entitled to a discount, I'm not going to pay you the VAT amount on that because I'm not collecting the full amount from my debtors, and therefore it is seen as an input item. So here we go. In terms of my calculation, it's 11,475 plus the 400 plus the 105. I add all those components. I subtract minus 7,800 minus 1,320 minus 187.50, and clearly you can see the amount that I owe to SARS is 2,672 Rand and 50 cents, right? Clearly you can see I've separated output and input for you to enable, for you to be, so that you can now calculate the amount that you have to pay over to SARS. Now, the question says, explain why Billy benefits from being registered for VAT. Quote figures to support your answer. Very important. The moment a question says, quote figures, you have to actually use figures from the given information to support your answer. And here you can clearly see it. Although we owe SARS an amount of 2,672 Rand and 50 cents, if we were not registered for VAT, then he cannot charge VAT, although he will be paying VAT when he purchases goods and services. For example, we paid the 7,800 on the purchase. Remember, the goods that we had purchased, we paid an amount of 7,800. So clearly, if you were not registered for VAT, the full amount would have been just part of your payment. And also, 1,320 on the essential services. The fact that we've paid that amount, we can claim it back because we are VAT registered. We are VAT vendors. Okay, So quite a bit of calculations in this segment. I hope you understand them. What is critical for you to remember, the moment you see an inclusive amount, it will always be 15 over 115. The moment it's exclusive, you just have to add 15% to the amount that you are working with. Okay guys, let's take a quick breather, let's refresh, and we'll see you just now. Welcome back, accounting boffins. Remember, we're busy with VAT. Quick recap, summary of what we've done so far. We know that when we're dealing with our VAT, we take into consideration the VAT rate to be 15%, right? The ethical considerations, internal control, very important in relation to VAT. You have to know what and how to answer questions of that nature. Remember that you have VAT 0 rated items, you've got exempted items, and then very important are your 2 VAT accounts, one indicating the amount of VAT you can claim back from SARS, which is your VAT input, and the other one is the VAT that you pay over to SARS, namely your VAT output. Okay, so now we have here, you are supplied with information relating to Hearties traders registered as a VAT vendor. All goods are subjected to 15% VAT. Okay. Complete the missing information in the columns supplied on the answer sheet. Calculate the amount due to or receivable from SARS and indicate whether the amount is payable or receivable from SARS. So obviously once you complete your calculation, you now have to determine whether the amount is due to SARS or due from SARS, okay? But when we get to that part of the question, we'll answer that. Here we go. Firstly, we are given cash sales of 1,200,000. Important, it's appearing under VAT exclusive. Remember that that amount does not include your VAT amount. So, if I do my calculation, this is what I'm going to do, 1,200,000. Have I got enough zeros there? 1,200,000 times my 15%, which will give me my VAT amount, which is 180,000. Okay, let's check now if we have our calculation done. Here we can see, there we go. Watch what it is. It's your 1,200,000, which is exclusive of VAT. Add the 15% VAT to it, like I showed you in the calculation, to give you an amount of 180,000. So what is the 180,000? That is the VAT on our sales, meaning it's an output VAT. It's the amount of VAT that we have collected from the end user, from the consumer, which we now have to pay over to SARS. So clearly you can see, there we are, there's the 180,000, which is my VAT that I have to, which is my output VAT, amount that I need to pay over to SARS. Keep that in mind, that this is the VAT that I've collected from the customers. Remember, as a VAT vendor, you're an agent of SARS. You're collecting on their behalf to be paid over to them. Okay, next one we go to is our credit sales, which is 805,000. But notice the difference now is you are given the amount as VAT inclusive, right? It changes completely in terms of your calculation. Watch my calculation now. What do I say? Once again, I take the amount of 805,000. Let's do that. 805,000 and times the 15, because that's my VAT rate, divided by 115, which is my amount inclusive of VAT. Therefore, notice from my calculation, it gives me a figure of, here we go, there's the figure 105,000. Again, you can see that this figure here would give me my output VAT of 105,000. Let's look at the amount. There we go. So the difference between the two calculations is important. Both of them are output VAT, but in one case it was exclusive of VAT. As you can see, you then had to work out the VAT amount by adding 15% to that amount. In the second calculation, guys, again it's output VAT, but clearly you can see the 805,000 includes the VAT, and therefore your calculation of 15 over 115. Okay. The next one you have there is bad debts of 21,750, right? Let's do that calculation. You can see 21,750. Here we go. Let's do the calculation. 21,750 times the 15 divided by 115 will give me a figure of, let's just check if I got the figures right. Clearly, let's see. Okay, sorry. Again, watch. Important consideration. I need to start practicing what I preach, which is read the full question. Maybe it was a deliberate error to show you. Watch where it appears. Bad debts exclusive of the VAT amount. Let's get that figure here. Here we go. It's my bad debts exclusive of the VAT amount. Therefore, watch my calculation. What will it be? 21,750 times the 15%, because it's an exclusive amount, to give me a figure of, why am I not getting that figure? Let's try it again. Let's just check it out again. There's something that we're not doing right. 21,750 times the 15% should give me the VAT amount, which is 326250. Okay, so all that we do now is we change that figure, because this figure now is incorrect. It's 326250. Let's change that figure to 326250. All right. Okay. The next one that we have here is our equipment purchased at 145,800. Again, let's do our calculation. 145,800. 145,800 times the 15% will give me a figure of 21,870. Voila, that one is correct. So we go back into our calculation here, and we've got the 21,870. Okay, now you find you have items here called rent income, you have interest on loan, and you have staff refreshments. Okay, now let's look at this, each item individually. Firstly, if you look at rent income is not subjected to VAT. So clearly given to you to test your knowledge to see, are you included as input or output? Definitely you can see that that does not feature as far as my VAT calculation is concerned. Number two, interest on loan, again, no VAT on it because it's a financial transaction which is tax exempt. So therefore will not be part of my VAT calculation. Number three, refreshments. But I've paid for the refreshments. Surely I can claim back the VAT? No, there are certain expenses on which you cannot claim back the VAT. Therefore, refreshments is one of them. It falls within the category of any vendor, even if you pay for refreshments, you can't claim back the VAT on it. Therefore, it is excluded in my calculation. Right, the last one we have here is our stationery, and clearly we can see here, if we take our stationery amount of 23,000, 23,000 is the inclusive amount times 15 divided by 115 will give me a figure of 3,000 Rand. So here we go, we got the figure of 3,000 Rand. Okay, now, what have we done here? We've calculated all the VAT amounts. Remember that these amounts here, I'm going to draw a line here indicating that there's no VAT necessary and no calculations necessary. So you need to read and see which items would impact on your VAT calculations and which items, for what reasons, would not impact on your VAT calculations. Okay, what we do now is we go to the next slide and we say complete the information. We've done that. Let us now do our calculations, and remember in this one here I think we have one change to make. I think it was in the input VAT. Let's just do that, make that change and see if we got the correct figure. Starting off from the 3, let's add our figures again. It's the 3262.50, 3262.5 plus 21,870, right? Have I got that figure? Plus the 3,000 will give me a total figure of 2813,250. So this is the amount that we need to change, right? 2813,250. Let's change it. 2813,250. Okay. Remember, because of that error, that change here, we made a change with the credits with the bad debts figure, and as a result, this total now changes to 2813,250. So therefore, 2813,250. Let's change this here. 2813,250. Right. Now we've got the correct figures. Clearly, you can see you added all your VAT outputs amounts to give you a figure of 213,000. You then added your input figures to give you 2813,250. Again, it's going to impact on this calculation here, so let's change it. 2813,250. Right. Now, a question arises, interesting that it happened here, so we can use it to our advantage. What if you make a mistake in your calculations, but when you're working out your amount that you need to, as the final figure, you will notice that this is what we call in accounting an accepted mark, a method mark. So these would be method marks here. Let me indicate to you that's what we mean by a method mark. That means that answer is based on a previous calculation. And as a result, there's no double penalty applied for you. Okay? So you can see how that a previous error will not impact on your final answer. If it does, you will not be penalized. Okay, this means that our total VAT output was 213,000. Let's get that figure. 213,000, right? Minus our input figure of 28,132.5. And this gives me a figure of 184,867.50. Let's get that figure, 184,867, 184,867.5. Right? Let's just check that figure one more time there. There we go, 184,867.50. Right. Okay, so now, this means that you have collected from SARS a total amount of 213,000. You have collected on behalf of SARS an amount of 213,000. You can claim back from SARS the amount that you have paid, the input VAT of 28,132 Rand and 50 cents. Okay, now you contrast the one against the other in order to determine what's the final amount payable to SARS. Clearly you can see it's your 213,000. It's your 213,000 minus the 2813,250 to give you a final figure of 184,867 Rand and 50 cents. So the amount is payable to SARS. A question arises, can it be a situation where SARS owes you money? Certainly it does. Allow me to explain. Let's assume that you are trading, it's a new business that you've started, so you have input VAT of 100,000 because obviously that was the goods that you have purchased. You can claim back that, but you just started trading. Okay, now remember this is another example, so I'm going to do it in a different color for you. So, and your output in this case is only 20,000. You just started trading and you've only collected 20,000 Rand as your output VAT. Clearly in this scenario here, you can see that the output VAT is greater. Sorry, let me repeat that. Your input VAT, which is the 100,000, is greater than your output VAT. Okay? Remember, I'm showing it to you in a different color so you can see the difference between the two situations. In the second scenario, your input is 100,000 and your output is only 20,000. In this case here, you can see that the 80,000 would be an amount receivable from SARS. Can you see that? Why? Because your input is greater than your output. But the example that we were doing, where we had our output as 213,000, right? In that one there your output was 213,000 and your input was 28,132,5. All right. So yes, you can have a situation where your input is greater than your output. Okay, we're busy with undeclared traders. The business is registered as a VAT vendor, 15% VAT is levied. Okay, calculate the amount due or receivable. Clearly you can see again, watch in this one here, you have VAT exclusive of 1,400,000. Clearly a calculation is necessary. There's my calculation, 1,400,000 times the 15% will give me my VAT amount of 210,000. In the second instance, again, you are given the exclusive amount. You know the calculation. It's the 15 over 115 to give you your VAT amount. Your bad debts, the VAT amount is given to you. Your merchandise purchase, your VAT amount is given to you. And your stationery purchase, the VAT amounts are given to you. Look at your calculation. It's a 210,000 plus the 120,000 because those are your outputs. Let's keep them there together. And then let's do the inputs separately. There you can see is what you're going to claim back from SARS. So minus 3045 minus 41412 and minus 2422 will give you an amount of 283,281, which is payable to SARS. So once again, guys, most important, ask yourself the amount, whether it's inclusive or exclusive. Right. Here we find a situation where the internal auditor finds an invoice which is signed and recorded, but the business does not exist. Okay, so clearly this is a case of some kind of fraud taking place. What will have to be done is the owner will have to go back and see how did this happen, because this wholesaler that we supposedly bought goods from does not exist. Clearly, this is an attempt at tax evasion. We've dealt with this at length. We know it's unethical, illegal, and a crime. So therefore, we must always do the right thing to ensure that we are fully compliant in terms of the law. Okay, guys, we've done a lot of calculations for you in this segment of the lesson. Please note, in summary, when you're calculating your VAT, if it's inclusive, it will always be 15 over 115, and if it's you just calculating the VAT amount, you'll add 15% to the amount exclusive of VAT. And sometimes you may be asked to calculate the sales amount. Then obviously your calculation will be 100 over 115. From me, Ashraf Patel, and the team, until the next time, aim for the moon. Perchance if you don't get there, you're definitely going to be a shining star. Ashraf's shining star. Goodbye.